Today we want to take a deep dive into the world of insurance and reinsurance. How has the sector and the industry been affected by COVID-19? What are the plans of recovery and also projections into the year 2021? And to help us put all this into perspective, I'm joined by Mr. Jadia Morania, who is the Managing Director of Kenya Reinsurance Company. Welcome, sir. The first question will be clarification. What is insurance and what is reinsurance?
Reinsurance is very simply put insurance of insurance. But maybe more technically put, it is a risk transfer mechanism which insurance companies are able to offload risks they have accepted from their insureds to a second party or security who is called the reinsurer. So that what happens is that when you go and insure your car with your favorite insurance company, so many other people do the same. And there is accumulation of risks of motor, for example, in this example, on the books of that insurance company. So they cannot keep all of it. They determine as an insurance company we want to retain so much per vehicle, say 5 million, and anything about 5 million, I'm going to offload it to another security. So what is actually happening there is that you're having a mechanism of transferring risk from an insurance company into a security which is called an insurance company. So whereas an insurance contract or an insurance company insures and insures directly, the same insured actually ends up being reinsured indirectly and without their knowledge necessarily by a reinsurance company. And it goes even further. A reinsurance company also doesn't have to keep all what it takes. The same way, when you accumulate risks from different insurance companies, and especially when you're dealing with a wide diversified markets or across international markets, then accumulation in you also offload it by another risk transfer mechanism to another insurer in a process called retrocession.
Let's take a look at the impact of COVID-19 on your business. How have you been hit in terms of your investments, in terms of your revenue? What exactly is happening over the last 10 months?
Business has been tough because from March, we all know, of course, COVID came in and it has come in with a lot of negative impacts, a few positive ones as well. And if you look at our business, maybe the way to look at it is in terms of the income streams, because that's where the impact largely comes in. The biggest income stream is gross written premiums. And what has happened is that COVID has made people, many of them unemployed, many because they have been laid off by employers. Businesses also have their turnover has reduced. And so the effect of all this is that they are unable to pay the insurance premiums the way they used to do before. That means a reduction in the insurance premiums that are going to the insurance companies, which consequently translates into less also going to the insurance companies. We've also seen regulatory interventions where regulators, including Kenya, Uganda, and many other markets, even West Africa, where the regulators have appealed to insurance companies to probably go slow in terms of collections of premiums or to give some kind of premium breaks or rebates because of the hardship in the growth of the economy. That also means that less ability to have premiums flowing through and more difficult in terms of debt collection for insurance companies, which also goes into the reinsurance companies. So the net impact on the premium side of things is that we are seeing less of it coming. We've also seen cases where there have been cancellation of policies, life policies, non-life policies, because when households are put under financial pressure, one of the easiest things to reduce from the budget is actually insurance. So all that has affected the premium. So we are seeing a downtrend in terms of premiums. The other side is the investment part of the business. Again, as Kenya Re, for example, we insure in all the insurance. I mean, we invest in all the investment vehicles in Kenya. Whether it's bank deposits, whether it's treasury bills, whether it's treasury bonds, the stock market, and all of them. Again, now, with the slowdown of the GDP growth rate, the entire economy is affected. The banks are not able to pay as much interest as they could have because their customers are also not paying, able to bank as they were banking before. We are also seeing the stock market. There was a lot of actually withdrawal of a lot of investors, especially the international investors, from the market into foreign markets, and many of them even going to investment in more secure treasury bills or even gold. So again, what we are seeing there is a return on investment in terms of interest from the banks has been less. A lot of companies are not able to pay dividends as they would have paid because again, when your operations are not good, you cannot go on paying dividends. So all that has also the impact of reducing the total overall investment income. And maybe the last part I would want to touch on is on rental, although it's part of investment. But Kenya Re is, we've got 4 commercial buildings, 3 in Nairobi here, 1 in Kisumu. And so being a landlord organization, where you're also getting rent from tenants who have been impacted by this same COVID, again, you get a lot of, especially the small and medium enterprises, asking for rebates on rent, asking for layoff in terms of a period during which they are not paying. Asking for a freeze on the escalation clause on rent. So again, as a sensitive landlord, like many others have done, we have made some adjustment in certain cases that in our assessment actually have been negatively impacted by the COVID. So again, that goes to reduce the total rental income, which affects the investment income. Finally, on the claim side, especially the medical class of business, of course, we've seen an increase in the claims arising out of COVID. The impact on the life business is not as much because fortunately for the country, the morbidity of the death rates have not been as bad as compared to some other countries. But other classes of insurance also in the general side, things like travel insurance, we have a lot of cancellation of travels, and that also comes with claims with it. There is a lot of cancellation of events that also translates into claims. Workmen compensation and many other classes have actually been affected.
With the effects that you've just mentioned, what are you doing to mitigate them?
One of the biggest we've done is really to embrace technology. We realize that with the coming of COVID, people have to, we've resorted to working at home. So actually one of our first response was social distancing needs to be there to avoid infections within the office. So we came into shifts of working where for every 2 weeks, where 50% of staff is in the office, the rest is working at home. Now, for you to be able to do that, you must have a technology. You must really embrace technology and have platforms which can really facilitate you to be able to do that. In our case, we embraced, we've got VPN, which we use. Every staff member can actually access the resources, ICT resources of the company from wherever they are, on the laptop, on an iPad, on a phone. We migrated the emails into the cloud. We got the latest Microsoft 365 cloud solution. And also in terms of, like if it's reinsurance, we got into place a reinsurance system. We call it 6, which manages the life and non-life business, meaning those in reinsurance working at home can actually access the system and work as if they were in the office. We've done the same for all the other operations. For example, we have a system that manages actuarial things. We call it Prophet. That is in terms of actuarial operations where they're talking about triangulations, you're talking about pricing, you're talking about reserving. We have systems that manage the audit aspects of business and accounting, finance of it. So in a nutshell, technology has really been key in making sure that we are still able to operate without necessarily being physically in the office. Yeah, and then of course in terms of business also, we have a lot of strategies like, for example, EVS premium. With this pressure for collection of premiums, we have kept our foot on the pedal, trying to be in touch with the clients throughout, so that at least we don't see a complete stoppage of payment of premiums, that we maintain the trickle in there. On the claim side, because we know also insureds as well as insurance companies are hard hit, we've been sensitive so that we've been responsive. Try and pay claims in good time. Try and give good service to maintain our brand and our relationships with the market. With the brokers, we have enhanced our relationship, so because that's where the business comes in through. On the investment side of things, what we have tried to do is to shift most of the resources to where the incomes are most stable. In our opinion, right now, it is in the fixed deposits, treasury bills, and other government securities like treasury bonds.
And now with the measures that you've taken to mitigate these problems, what are your projections in regards to business the tail end of this year and 2021?
That has been a challenging area because, like I described, for example, if you look at our premiums, the way we projected as a company, and we believe, okay, as a company first, is that we think the premiums will be impacted negatively, maybe to the tune of 5%. In terms of investment income, we are seeing maybe another negative impact there of about 3% against our target, our annual targets. And in terms of rentals, like I'm trying to describe, we may also see another 2 to 4% or in that neighborhood. We believe this is replicated in the market. The market, again, because of what I said, that inability to pay and the need to go slow on payments, we also expect a downward pressure on premiums against the target. We see a slight increase in claims, and that obviously means a reduction in the total profitability of the industry, which would translate into probably less dividends paid for this year to the shareholders. COVID has come with a lot of negative impacts, but there are also a few positive ones. To me, really one of the biggest positive is an opportunity to innovate. What has traditionally happened is that pandemics are not covered by insurance and reinsurance as well. And in Kenya, there is this situation where we realize that a lot of the insurance companies, I think actually all the insurance companies except two, actually did not exclude pandemics from some or most of their insurance policies. And they also probably may not have reinsurance for the pandemics in their treaty insurance, so that there is a gap. And now that gap is what may have caused some of the conversation you may have seen in the market. Insurance, maybe asking reinsurance, can you step in to contribute to the hardships, which are really understandable and visible, even if it's on ex gratia basis, where ex gratia means pay, even if you are not contractually about to pay, can you consider for business considerations or relationship reasons to pay some of these claims. And yes, some of them are being looked at, but arising out of that is to say that now that the market or the insurance market has realized there is a loop not covered in terms of that pandemics, it creates an opportunity. In insurance, we say that you can insure anything as long as it's correctly priced. Pandemics traditionally have been left to the government because of their wide-scale magnitude and potential for losses. Here we are talking about earthquakes, we're talking about disease outbreaks like COVID. So, but looking at it, you can still come up with products, maybe limited to a certain extent. You limit the exposure, or you define the exposure in a way that you can properly price it, and that becomes a product. And we are seeing some movement in that direction. We partnered with some of the companies. We are looking at how to do it, and I can see it coming in the fullness of time, coming into play, especially for medical, life business, and even things like travel.
Now, we understand that majority of businesses in this country are micro, small, and medium-sized enterprises. What is their space in the insurance and reinsurance world?
A very big space, because you see, at the end of the day, insurance is business, and as a business, you must follow the sources of income. Small and medium enterprises contribute a huge chunk in terms of this economy. So what is really happening, and this has been happening for quite a number of years now, is a situation where insurers are identifying the micro-insurance as a major area, and of course products have been developed, micro-insurance products, whether it's in fire, whether it's in the trading, the operations policies. So since that is where the generation of revenue is, we have seen policies where in micro, like I was saying, premiums are even allowed to be paid on daily basis. Very small amounts, 20 shillings, 50 shillings. And the idea is that whereas those businesses may not have huge cash flow, cumulatively, if you look at the total of what the small and medium enterprises sector is doing, is enormous. And therefore, the response of insurance on this has been develop micro policies that are tailor-made to the realities of the business, where realities might mean even allow for premiums to be paid on M-Pesa, for example, or mobile phone platforms, and claims can also be paid on platforms, mobile claim platforms. We are also seeing insurers coming up with platforms where now you can, even claims, you can log into and pay and make your claims through platforms without necessarily going to the insurance companies. There are a lot of them refer to them as aggregators. So yes, because there's more business cannot be ignored. Cumulatively, it's such a big sector. Insurance companies have to respond and come up with products to address this, and it is happening.
Kenya Reinsurance Company has been there for a long time, 50 years and going. You've seen it all. What are your strategies as you speak right now? What have you achieved and your projections into the future, maybe in the next half a century?
And in this 50 years, it has actually contributed a lot to the national economy. If you looked at, of course, in terms of development, the mandates for which it was formed first was to ensure there is capacity for insurance in Kenya. By providing reinsurance capacity to the insurance companies, which happened for many years. Up to now, it is happening that Kenya Re provides reinsurance capacity. The other mandate was to avoid the outflow of foreign exchange, especially just immediately after independence, to other countries by insurance companies having to insure in Europe or outside Kenya. So retain the foreign currency in Kenya for purposes of national development. It was also formed to train Kenyans and staff in terms of reinsurance, which we think it has done very well. Almost many insurance companies have people who are either trained by Kenya Re or worked there. And we think it has done its mandate quite well. In terms of investment, it was also created to, of course, to generate investment revenues for the country. And on that side, it has done a lot. Other than the 4 commercial buildings, the Reinsurance Plaza here, Kenya Re Towers and Anniversary Towers, and the Reinsurance Plaza in Kisumu. There was also a Reinsurance Plaza in Mombasa, which was sold. It also participated in development of physical development of assets across the country. There are residential estates in Kisumu, in Eldoret, in Mombasa, in Meru, in Nairobi, many of them in Karen, in South B, in South C, Waiyaki. It really participated, where it would sell quality, it would build quality properties and then sell them to public. It has given mortgages to so many Kenyans. It still continues to do that. And that's a side of business that probably people don't know about Kenya Re, although we don't, it's not our core business, so we don't focus a lot there, but it's possible to get a mortgage from Kenya Re. Now, in terms of looking into the future, the company is 60% owned by government and also 40% by other shareholders, private shareholders. The purpose of any investor is to get returns. So the main focus is really to have financial performance of a company so that it continues to generate dividends for the shareholders. And we have a 5-year strategic plan which focuses on key parameters. We've actually come up with 5 core areas of focus. One of them is financial performance. In this, we are looking at building profitability, growing the premiums, growing the investment income, including the rental income, managing costs efficiently, making sure that there is profitability on incremental, every year and year, it is growing every year. All aspects of finance, including the share price of the stock itself. So one major focus as a captain going forward is that we want to see continuously improving financial performance. And we've seen that in a stretch of the last 10 years, for example. Then the other area that we want to see is product development, which is largely what you're looking at areas of innovation, looking at the markets, where else can Kenya Re be? Right now it is in Africa, it's in Middle East, in Asia. It is not, the levels of participation in business in different countries is different. So we want in the countries that we don't have business, we want to develop it. In countries that we have a business, if we have 10% in a company X, we want to push it to 15 and to 20, develop what you have. So we're talking actually about market development and penetration as well. We are looking at developing products to address needs in different countries, because different countries have got different needs. We are looking to establishing relationships with intermediaries or brokers, because that is where business comes in through, as well as directly with the seeding companies, so that we secure the future of the business we have and continue to grow it. The third pillar on which our strategy is based really is on risk management. Reinsurance and insurance is a business of taking on risk. you must manage your risk properly. So we have deliberately put in place risk management structures, complete with the risk appetite, complete with the very clearly defined risk appetite, which tells us what we can do, what we cannot do. We have attained, for example, a risk maturity of up to 81% now. But now we are focusing a lot on entrenching risk as a culture in terms of the way we manage business, that every decision making bears in mind also the risk aspect of the business. In that pillar, we are also looking at issues of governance as well as internal auditing and reviewing of the operations. How is it we want to operate in a way that everything is above the table, everything is ethical, and governance structures from the board, and whereas the board committees, management committees, everything is really respected, so to speak. And finally, we talk about people and culture, because all these pillars really are driven by people. So in going into the future, we are focusing on continuously recruiting talent that is capable of driving the company forward, training and upscaling, creating awareness as much as possible, competitive compensation for staff to retain them, and motivating the staff through a proper reward system which is based on performance. We use the balance scorecard to assess the performance of staff, and you get rewarded based on the output on your appraisal and based on the output against the scorecard that each staff has been given.
Definitely.
Yeah.
Thank you very much, sir.
Thank you very much.
For those insights.